Good evening, everyone. Tonight we're diving deep into a story, a narrative that's rapidly unfolding on the world stage. It's a story with the potential to reshape not just economies, but the very fabric of international relations as we know them. That story centers around an increasingly influential alliance known as BRICS. BRICS is an acronym that stands for Brazil, a South American powerhouse with a vibrant economy and rich cultural heritage. Russia, a vast nation spanning Eastern Europe and Northern Asia, wielding significant influence in energy and geopolitics. India, a rapidly growing economic force and the world's most populous democracy, boasting a burgeoning tech sector and a youthful workforce. China, the world's second-largest economy, a manufacturing giant and a key player in global trade and investment. And South Africa, a gateway to the African continent, rich in resources and strategically positioned in the southern hemisphere. But what exactly is their shared goal? At its core, BRICS aims to amplify the collective influence of its member states on the global stage. They seek to foster a more balanced, multipolar world order, one that is less reliant on the dominance of the United States and its traditional allies. This ambition stems from a desire for greater representation and a more equitable distribution of power in international institutions. To achieve this vision, over the years, they've been actively building their own institutions and frameworks for cooperation. A prime example is the New Development Bank, or NDB. And recently, in a move that signals its growing ambition, BRICS decided to expand its membership, extending invitations to Saudi Arabia, a global energy giant, and a key player in the Middle East, the United Arab Emirates, a dynamic hub for trade, finance, and innovation, Iran, a country with a rich history and significant geopolitical influence, Egypt, a strategically important nation connecting Africa and the Middle East, and Ethiopia, one of Africa's fastest-growing economies with a large and dynamic population. This significantly expanded bloc now represents a substantial portion of the world's population, economic activity, and natural resources, giving it considerable weight in global affairs. BRICS is more than just a collection of individual countries. It's a strategic alliance with a shared vision and a growing capacity to challenge the existing global order. Their coordinated actions, from establishing new financial institutions to expanding their membership, are all integral components of a larger, more ambitious plan, the creation of new banks and the inclusion of new members. But perhaps the most intriguing and potentially transformative development is the ongoing discussion about establishing a common currency for BRICS nations. This isn't merely an abstract economic concept, it represents a bold and direct challenge to the very foundations of the current global financial system, which has long been dominated by the US dollar. As BRICS continues to evolve and expand its influence, the world is watching its every move with keen interest and a mixture of anticipation and apprehension. So let's delve deeper and explore the potential implications of this evolving alliance and what it could mean for the future of global power dynamics. In today's fast-paced digital age, information spreads like wildfire. A single image, a catchy headline, or a provocative idea can capture the attention of millions in a matter of hours. Recently, images of a supposed BRICS currency note have surfaced, showcasing a design that aims to represent the economic alliance of Brazil, Russia, India, China, and South Africa. These images depict what a unified currency for these nations might look like. And these images have gone viral online, spreading rapidly across various social media platforms and news outlets. The speed at which they've circulated is a testament to the global interest in alternative financial systems. These sleek designs, with their modern aesthetics and symbolic representations, have captured the imagination of people worldwide. Take a closer look at this concept banknote. The intricate details and thoughtful design elements are hard to ignore. It's featuring the flags of member nations, visually uniting the BRICS alliance in a tangible form. This design choice underscores the collaborative spirit and shared economic goals of these countries. Unsurprisingly, these images have sparked debate. The very idea of a BRICS currency challenges the established global financial order. So, is a new global currency about to launch? Is this the beginning of a significant shift in the world's financial landscape? The truth is a bit less sensational. These are just concept images, created by designers to visualize a possibility, not official releases from any BRICS institution. But their popularity shows how ready people are for change, how eager they are to explore alternatives to the current financial system. and it highlights how powerful the idea of a BRICS currency has become, capturing the attention of individuals and institutions alike. The images symbolize a global desire to move away from the US dollar's dominance, reflecting a growing sentiment that a more balanced and multipolar financial world is needed. For supporters, they're a sign of hope, a glimpse into a future where economic power is more evenly distributed and where developing nations have a greater say in global financial matters. But for others, they represent a warning of big changes ahead, a potential disruption to the established order that could bring both opportunities and risks. Even though the note isn't real, the conversation it sparked is very real. It's a conversation that's happening in newsrooms, online forums, and around dinner tables across the globe. It's made the idea of a new currency feel real and urgent, pushing the discussion from the realm of abstract theory into the forefront of public consciousness. This is more than a meme. It's a cultural phenomenon that reflects deeper anxieties and aspirations about the future of the global economy. It's a signal to world leaders that demand for alternatives is growing, that citizens are increasingly aware of the limitations of the current system and are seeking new solutions. The world is visualizing a future where the dollar isn't the only option, a future where multiple currencies coexist and compete, fostering greater stability and resilience in the global financial system. These images have made a complex issue accessible to millions, sparking curiosity and encouraging people to learn more about the intricacies of international finance and the potential for a more equitable global economic order. The question now, why are BRICS nations so motivated to pursue this? What are the underlying economic and political factors driving their desire for a new currency? Let's dig into their reasons, exploring the motivations and potential implications of a BRICS currency in the evolving global landscape. Why push for a new currency? In a word, independence. The US dollar dominates global trade, giving America outsized power. BRICS nations see this as a vulnerability, especially after US sanctions froze Russia's dollar reserves. They want a system that can't be controlled by one country's politics. Relying on the dollar ties up their capital and exposes them to US economic swings. A shared BRICS currency could cut costs, reduce risks, and boost trade within the bloc. It's a bold move to build a more balanced, multipolar world, but can they really pull it off? Let's see how a BRICS currency could challenge the dollar. The US dollar's power comes from its unique position as the world's reserve currency, a status it has enjoyed for decades. This means that most international transactions, from oil trades to sovereign debt, are conducted using the dollar. Central banks around the globe rely on it to hold their reserves, manage their economies, and facilitate international payments. It's the bedrock of the current financial order, providing stability and liquidity to the global market. Global trade relies heavily on the dollar. The vast majority of international trade agreements are priced and settled in US dollars, making it an essential tool for businesses and governments alike. This dominance gives the US significant economic and political leverage. Now, the BRICS nations, Brazil, Russia, India, China, and South Africa, are exploring the possibility of creating their own currency. A BRICS currency would first be used to facilitate trade within the bloc, reducing their dependence on the US dollar. This would allow member countries to bypass the dollar in their mutual transactions, potentially reshaping the landscape of international finance. It's a move towards greater economic independence and a challenge to the existing world order. With new members like Saudi Arabia, a major oil producer, joining the BRICS alliance, the potential impact of this currency becomes even more significant. And the UAE, another key player in the global energy market, also on board. That's a massive market, representing a substantial portion of the world's population and economic output. Imagine China buying oil from Saudi Arabia, using the BRICS currency instead of US dollars. If this becomes a widespread practice, global demand for the dollar could drop, potentially weakening its position as the world's reserve currency. There's also talk of backing the new currency with commodities, a move that could provide it with intrinsic value and stability, like gold, a traditional store of value, or oil, a crucial commodity in the global economy. This could potentially make it more stable and less susceptible to inflation than fiat money, which is not backed by any physical commodity. But replacing the dollar isn't easy. The global financial system has been built around it for decades, and its infrastructure is deeply entrenched. For BRICS to compete effectively, they'll need trust among member nations, economic stability within their own countries, and deep cooperation on monetary policy and financial regulation. The goal isn't necessarily to dethrone the dollar overnight, an almost impossible task in the short term, but rather to offer a credible and viable alternative that can gradually erode the dollar's dominance over time. The timeline for this ambitious project is still uncertain, but the BRICS nations are determined to move forward. Let's take a closer look at what's next on their agenda. Reports say BRICS is targeting a 2026 launch for their new currency or payment system. Why 2026? It's a strategic deadline, enough time to plan, but soon enough to create urgency. This timeline pushes members to act and signals to the world that they're serious. By then, they hope to integrate new members and build the technical infrastructure needed. The timing also matches a period of global uncertainty, making their alternative more appealing. Some analysts are skeptical, suggesting the first step may be a digital payment system, not a full currency. Still, the 2026 target has focused global attention. Whether it's a full currency or a digital system, the world is watching. What opportunities could this bring? A BRICS currency could give member nations more control over their economies, free from US policy swings. It could boost trade within the bloc, making transactions cheaper, more stable. Imagine Brazil buying from China, India buying oil from Saudi Arabia, all in one currency. For developing nations, it offers a real alternative to the dollar, more diversification, more stability. This competition could make the global system more balanced and disciplined. A successful BRICS currency would symbolize a shift toward a multipolar world. It could even push global institutions to become more inclusive, more representative. The stakes are high. This isn't just about money, it's about reshaping global power. But the path forward is anything but easy. The challenges are huge. BRICS nations are diverse. China, India, Brazil, Russia, and others have different economies and political systems. Trust and cooperation are major hurdles. Can rivals like China and India share monetary power? Technical challenges are daunting. Building a secure cross-border financial system is complex. Setting exchange rates, managing capital flows, and regulating banks across countries won't be easy. Global acceptance is another barrier. Trust takes years to build. The US dollar's strength comes from decades of stability and global trust. For BRICS, ambition is high, but execution will be the real test. Let's weigh the global pros and cons. A BRICS currency could democratize global finance, reduce risks of crises from one country, and foster innovation. Asset-backed money might bring more discipline and stability, especially for resource-rich nations. But the risks are real. A sudden shift from the dollar could trigger global chaos and recession. The transition could be volatile, affecting everyone. There's no guarantee a BRICS-led system would be fairer. It could just swap one dominant power for another. Competing blocs might mean more trade barriers and less cooperation on global issues. The world could become more divided and unpredictable. The outcome is uncertain. Change brings both opportunity and risk. So, what does this mean for you? For everyday people, a BRICS currency could have real effects. If the dollar weakens, US imports get pricier, raising inflation, but exports could benefit. In BRICS countries, a stable trade currency could mean more growth, jobs, lower prices. Regional trade could get easier, boosting prosperity. Globally, people might diversify savings, no longer relying just on the dollar. This could change how we think about money and security. The future is uncertain, but the conversation is already reshaping the world. Whether this leads to more balance or more volatility is the big question. We'll keep watching, because this story is about the future of your money.